What's up? What up? What up? What up? What up? What up? What up? How's everybody doing? How's everybody doing? Hope you guys are having an awesome night. Hey, what's going on, guys? What's up? What's up? What's up? Hope you guys are having an awesome night. Have you all awesome day. Wanted to see if I can share this thing going on right now. Can I share? Hey, what's going on, guys? What's up? What's up? What's up? If y'all guys don't know who I am, my name is Donnell Lovely. I'm the owner of Refund Tax Solution and Lovely Financial Services. Tonight, I'm actually trying to go in to actually people about these business owners that's been converting, that's been doing business in the last few years and seeing how they their business has been growing and being able to understand what an S corporation is and how the tax benefits of that. So, guys, hold on. I'm talking. All right, if you guys can hear me, press 1. If you guys can hear me, press 1. I'm coming live from my office here and wanted to actually talk about some of these things because it's very important to understand how to incorporate tax planning into a practice, or as a client, understand how to plan for your taxes. Because if you don't know, it says taxes about 30%, 33% of your income, if you have an earned income, is taxes. So that's a third of your income going into taxes. Well, you don't really know how to reduce that. And now with all the new law changes, the Tax Cut and Jobs Act, all the other acts that have been coming around, the Build Back Better that's going to try to come up, all these different things have affected the way you live, the way you work, the way you conduct business, right? So if you're in the last couple of years, like I said, the pandemic has affected a lot of people more ways, but it's affected a lot of people other different kind of ways, right? We have new businesses coming in, new industries developing. We have NFTs, we have crypto, we have e-commerce, we have trucking and dispatching. Like, people have been really out here changing their own lives and their aspects. But what I want to ask you is, how are you setting up your business to reduce your liabilities when it comes to the taxes? Because if you're at home dispatching and you're making, $10,000 or $10,000 a week, and you ain't really got no expenses, you're gonna have a problem, right? Not unless you set yourself up and your business up in a proper way. Now, I know a lot of people calling me. I've been having a lot of clients reaching out to me about their business, how much I done made this year, how much I done did this year. This time of the year, it's too late to worry about what happened last year. And I've been telling people that, as we go on, you want to make sure that you're preparing yourself in advance, right? In advance for the year to come, so that you won't have this type of issue. So people I made $10,000 a month at the house dispatching, blah blah blah. Well, what type of expenses and things like that you're going to incur at the house? That's just kind of like regular normal. It's not that much that you can write off when you're actually talking about business, if you're not structured in the proper way. If you're not structured as an LLC, if you're not structured, even if you're structured as an LLC, there's only so much that you can actually do, right? You don't have the lucrative benefits of having to defer payments and things like that, taking 179 deductions and all those different types of deductions. But what I want to talk about, guys, is, hey, I done made money. What do I need to do to get my situation to where I can reduce my liabilities, diversify my income, and still make the same money? I'm not have to just spend it all, right? Like, a lot of times say you got to spend all this money, get rid of it. Well, you can just transfer a lot of those different things into other assets that's making you more of a passive income, right? So, for instance, if you got money that you got coming in as a dispatcher or as a crypto person, you want to channel that money into avenues that's going to help you for your retirement. Like, how many people really got their retirement straight up, right? How many people paying into like life insurance in case something happened to their families? Those are things that defer taxes from, you as an individual for you still using the money, but you don't really have to pay taxes on it, and it's still growing money. It's not like it's gone or you spent it or you had to just get rid of a bunch of money, like, buy different cars or clothes or whatever to do that, right? So what I want to actually talk about is how to convert your LLC, your sole prop LLC, partnership, whatever, to an S-Corp, right? The conversion process, and how does that work and how does that benefit you, right? So I want to give you a few benefits of being able to convert your existing entity into an S-Corp. Now, one of the things I want to actually talk about, but what is an S-Corp, right? It's an entity. S-Corp is an entity that allows for a single stock, right? Individual stock, and no more than 100 shareholders, right? If you fit in that category of a single stock and no more than 100 shareholders, then you can actually be qualified or be elected to be qualified to be taxed as an S-Corp. It doesn't have to do with your income status. It doesn't have to do with your credit history. It doesn't have to do with like how long you've been in business. You can do that election at any point, right? But you want to make sure that you do the election in a certain amount of time window, or it's going to be considered late, and then you have to file paperwork for the being late, right? So you first start your business, right? Or you've been in business for a few months, 6 months, 8 months, or whatever. You're LLC, got all that stuff going on when you first got it. Now you're good to go. But you realize that, like, look, I ain't got that much expenses to be paying. What do I need to do to diversify or to move some of this money to a more passive aspect of it, right? Because if you don't, then it's going to be a cap, and right, you're going to be highly regulated, highly taxed, things like that, right? So one of the first benefits of having a conversion to from an LLC or a self-employed individual, from a disregarded entity, as we say it, to an S corporation, is you're less likely to get audited. That's number one. You're less likely to be audited as a corporation than versus as a disregarded entity, LLC, S-Corp, Schedule C, those type of individuals, partnerships, K1s. You're more likely to get audited than the actual corporation, right? They put their energy on the low-hanging fruit. The low-hanging fruit, which is, people that do, self-employed, say I'm a lawn care service, blah, 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 blah. I'll do this, I'll do that on the side hustle type of thing where they're not really structured properly. You can still be your side hustle, but once you structure it properly, then you're less likely to be audited. You're less likely to have those type of issues or proof, but now you're actually more entitled to have those different type of restrictions are put upon you, right? So some of the restrictions that's going to be put upon you is, again, that number one, that you must have no more than 100 shareholders, meaning no more than 100 active people that own shares of that particular company, right? No more than 100 people that own a particular company. You cannot have more than one form of stocks, right? You can only have one particular form of stocks that makes you qualify for that particular entity, right? And you must file it on time, right? You must pay yourself what's called a reasonable salary. And what that reasonable salary means is, hey, just say for instance, like, look, it ain't nobody just but me down there. Ain't nobody but me. I ain't got nobody, but I got a wife. I got 3 kids, right? We go out, they help me a little bit, but I that's what I got. I got me, my wife, and my kids. I ain't got no partners. I ain't got no partners. I ain't got no shareholders. I ain't got nothing. Well, as a LLC that you can have, you don't have shares. You don't have things like that. You have contractors. You have distributions that you can take, owner's draw, things like that. But you're not paying yourself a salary. It's not a requirement. Well, at S-Corp, it's a requirement to pay yourself a salary. And the stakeholders that in your entity, in your business, they are required to be able to be, they can be compensated as well, to not have to pay taxes, right? So also, an S-Corp is another pass-through entity where the corporation does not pay any taxes. That's another benefit. The corporation does not pay any taxes, right? But the corporation, all the income and expenses the corporation has, at the end of the expenses, all the profit flows to the partners, right? So for instance, just give you an example, right? Just say I ain't got no partners. It's just me. But I got a wife, I got my kids. And I actually put them in as being partners. Now it's 5 of us, right? So I can if I do it correctly, and again, I just want to just throw it out there, an example now, If I throw it out there and say we made the same $100,000, right? Net profit. Net profit after everything. Okay, we get the QBI, that's 80 grand, right? Now, I've already paid myself, right? But now I can pay other benefits out of the corporation that can pay for other things that I have, right? If I have fringe benefits, like if I have a car payment to me from the business, now my car payment that I pay already as my personal, the company pays for that. It's a benefit to you, and it's rolled off as a benefit. If I have want to provide insurance to myself, if I want to provide insurance to myself, that's a benefit. The company pays my insurance. The company pays my my 401k, IRA, and they match it as well. You can't do that in the LLC because of the restrictions on that. My company can pay my wife a salary. The company can pay my children a salary. And it all ties back into the same thing where it actually rolls over through there. And now because they're shareholders, my wife is, she gets a portion of that shareholder that's not going to come back on my taxes either. Right? So everything that's left over is pretty much nothing, but you still kept the money. And then go to taxes, and then go to other things, what the actual stuff that you use, daycare for the child, travel expenses that you pay out for the business, tuition and fees that you have if you try to get like more education, like, hey, my wife going back to school to do this, do that. We're going to pay it. The company's going to pay her ambition. Now that whole thing is off. For instance, you can have her student loan payment as a fringe benefit that you say, hey, we're going to pay $25,000 a year towards her student loans or whatever. Instead of now going to the 2,500 rule where you have that student loan payment on your personal, the company can actually write all that off as a company expense, right? So just give you guys some examples of what the benefits of converting that LLC, that partnership, that sole prop over to the S corporation, right? And most of the time that you'll be able to understand, see like where the money goes. Like if I have $100,000 and I'm a self-employed individual, what is going to happen? Number 3, I told you 3 ways. You avoid self-employment taxes, right? The S corporation does not pay self-employment taxes. Sole prop does. LLCs does. Schedule C does. All that stuff fall on the Schedule C. You're going to pay self-employment taxes. S-Corp does not pay a self-employment tax. C-Corp pay a tax, a double taxation tax, right? So just by understanding those kind of concepts allows you to be able to be in a position where now you're saving for your retirement like you wanted to, and without having to be taxed on there. You're having your health insurance covered, right, for you and your family. Your children are able to get paid and buy things that they need to buy, and it's been capped at a certain amount, the standard deduction amount. It goes up every year, so it changes. And then you can, all your travel expenses and everything that you do as a unit, as your executives, as your board members, as your shareholders, they all benefit, and now you can take that trip, that family trip or whatever, and it all has to be for business purposes, right? But again, I want you guys to consult with your professional, whether you have one of my agents do it, or if you have your tax professional, go to someone that understands the conversion from an S-Corp or from an LLC partnership or any other corporation or any entity to an S-Corp, right? And if you need help with trying to do the conversion of an S-Corp, or you need assistance, I'm actually going to put the link to book a strategy session with me so that we can see how we can help you with that. If you're a tax professional that want to understand how to add that particular kind of service, the conversion services, as well as the preparation of the S-Corp, then I want you to join the masterclass that we're actually giving out coming on February the 1st. It's going to talk about the conversion, talk about how to do an S-Corp, talk about your pricing on the S-Corp and the conversion, because one service is just your conversion. Now you can get charged for your conversion, you can charge for the S-Corp, you can charge for the personal taxes, you can charge for the quarterly estimated taxes, you can charge for the bookkeeping services, you can charge for the tax planning services to implement all the other strategies that you have to implement, right? If it's a SEP or IRA, like all those things, if you're going to implement that, that's a separate charge. So now one client can take a load off of what you're doing with the one client that you're already doing right now, okay? So I hope this was helpful. Leave some comments, leave some check marks, leave something down there for me so I can know that y'all kind of chiming in with me a little bit so that you guys got to understand. But again, February 1st, 7 p.m. I want you to go ahead and register for the class. We're going to have a master class. Already discounted at halfway so that you can actually be able to get in there and understand if you're a professional, you want to offer S-Corp and business taxes, and understand the conversion parts of it, understanding how to price your services, and also how to do other ancillary services that go on top of that business. Then I'll tap into that course there. It's going to get you. I told people, hey, we're gonna take you from, you know what I'm saying, having an extra 50K a month with just 50 clients or less, just by doing S corporations. And just this year, right now, while we still in tax season, you get you a couple of S corporations, and now you can actually get you an extra 50K on top of what you're already doing right now, right? So, Tax Pro, chop in with me if you need help with the conversions. DM me. My link in my bio to book a session with me. The course is in the bio as well if you want to look in the bio for that. We're going to be live. We're going to be doing live on the 1st, okay? It's going to be a live training on the 1st on the corporations, the S corporation and the conversions, all right? And the benefits and how to get that stuff going on. We're going to start step by step by step by step. And now we're going to get you to where you are, where you want to be. My name is Donnell Lovely. I'm with Lovely Financial Services and Refund Tax Solutions, where we help small business owners, real estate investors, pay the least amount of taxes and increase their capital while using those different types of strategies, right? So, guys, hope this is helpful. I'm going to get up out of here. It's Friday night, and I feel all right. All right, y'all have a good night, man. We'll talk to you soon, all right?